A lot of people have been complaining about the tariffs. What are your thoughts on that?
Yeah, it's a big area. I mean, ideally, you don't want to have tariffs. Okay, that's I think everybody agrees you want to have free trade. The problem is there wasn't free trade anyway. I mean, what Donald Trump exposed more than anything was that people were very protectionistic while they were all crying free trade. So if you went to Europe, they had all sorts of barriers, and the United States really couldn't get a lot of their products into Europe. In Canada, we have a fairly good trade arrangement with the United States. When you went around the world, the U.S. had allowed, and they knew this, they had allowed themselves to be taken advantage of, and it was more one-way trade. The U.S. was a large market, and they allowed people into their market very easily, but other markets kept putting up barriers. Well, maybe that was fine after World War II, when countries were weakened substantially, and the United States was the emerging powerhouse. And so they wanted to help in reconstruction of the global economy and so forth. But those days are long gone, and the U.S. has been running massive trade deficits, budget deficits, and can't afford to keep doing that anymore. And of course, it's had a big impact on the hinterland, the inside, the interior of the United States. That's why I think that's been reversed, and using tariffs to be able to speed that up, I think does a couple things. Number one, it levels the playing field, because some of it's just leveling the playing field because the other countries have had barriers that are non-tariff oriented. And then secondly, it speeds up the money coming back into the United States. Again, we've been on the butt end of that to a certain degree in Canada, but I'm not complaining about that. I mean, we all have to look out after our own economies and protect them. And I just wish we had Canadian leaders that were as strong as putting Canada first. We all need to have leaders who put their country first and then compete fairly with each other, and I'd be much happier. So I think the tariffs are being used relatively well. I mean, the way Trump goes about it, I know can irritate people, and his personality and sometimes the way he does things. But at the end of the day, I think they've been really quite fair. And from the U.S. perspective, it's raising money and it's getting a lot of onshoring. This is good for the U.S. So if I was an American, I'd be thinking, thank you, Donald, for what you're doing. I would not be pushing back too much on it.
You brought up housing. What are your thoughts on the housing market in the U.S.?
That's a big question. And we've seen throughout most of the Western world housing prices going up a fair bit, certainly faster than income. And that's certainly the case that's happened throughout most of the United States. But housing is regional. You have to look at it by location and pockets. As you know, you're in California, and they've had higher prices in California and more of a real estate bubble there. If you go into places like Kentucky, the prices are much more reasonable and so forth. So it varies. But overall, what you've had is easy money and super low interest rates. And that has fed a malinvestment and in many cases, or certainly the increase in prices of homes. You've chased the prices of homes up. If you add to that a lot of immigrants coming into your country, we've had this situation in Canada, they also constrain the infrastructure. I mean, especially if you add, I mean, I'm not sure exactly how many the United States added in a very brief period of time, but, it was 10 million, 12 million, 15 million, a large number. Of course, that's going to put pressure, again, on the market. So we have seen weakness in the housing market. Whatever goes up will eventually come down to an equilibrium. And with interest rates coming off of practically zero and going up, that clearly has stressed the system. So I think the housing market will continue to be overall weak. We see that in Canada, housing is finally coming down. And so people will be able to get better opportunities in terms of prices. And maybe it's better for the younger folks who will be able to get into the market. So most of the market's pretty weak in the U.S. And that's one reason why Donald Trump said he wanted the mortgage agencies to buy $200 billion worth of mortgage-backed securities. He wants to try to get the mortgage rates down. This is also going to be important, I think, this year with the Federal Reserve changing hands in terms of leadership. It's pretty obvious that the new person that comes in will be more inclined to drop interest rates, which should at least support the housing market. I think the Trump administration does not want to see a blow-up in that area.
You're very bullish on the U.S. economy and the future of the U.S. What do you think of the stock market right now and the valuations?
Yeah, and again, that's a great question because these can diverge, right? And so I do think the U.S. economy, again, relative to other economies around the world, is one of the best placed in terms of growth, economic growth, and the policies and all of that, which we've talked about. But then you have to look at the stock market, and then you say to yourself, just because the economy is going to do well in 2026, certainly beyond most countries in the world, that doesn't mean the stock market will rip and roar also. And so I think people need to realize that the stock market has done well and is trading at high valuations on any kind of fundamental analysis. So if you look at it on a price to cash flow, price to earnings, market capitalization as a percentage of the total GDP, which Warren Buffett likes to look at and stuff like that. So if you look at all of these basic measures of value, the stock market is expensive. I know has also been pushed up as a result of AI investments and what we talked about, the whole digitization and the Google, Facebook, or Meta, and Apple and so forth, the Magnificent Seven as they call it, NVIDIA and things like this. My caution would be that we could have a year, even though the economy does well, where the stock market does nothing overall. But we're value investors, so we don't mind that, because we like to go in and mine little opportunities. That we try to find companies that are trading below what we think is long-term value, the ones that are overlooked. A lot of the market's been propelled, especially in the U.S., by a limited number of companies, the big guys, the Magnificent Seven. Everybody hears about these companies. But below the surface, there's some really strong companies. So I would just caution people, just because the economy does well doesn't mean the indexes will, as I say, rip and roar. They could have a down year. I don't think they'll be down a lot, but they could certainly have a down year with the prices being very high, and play catch up. Just to normalize. But there's opportunities below the surface, and that's what we look at as investment professionals.
Are there any sectors that you're looking at right now that you're saying a lot of opportunity in these sectors?
We're finding sort of gems here and there throughout a variety of sectors. I would say that manufacturing companies, industrial businesses, they have been not too sexy the last couple of years. And yet, if you're going to build out your economy and there's going to be more reshoring, I think there's opportunities in that area. Insurance companies, there's a number of insurance companies that we're invested in that are trading at what we believe are relatively low valuations. They haven't been, again, they've been overlooked. Kinsale, Markel. We have a little position we just built in American Coastal, which is kind of a neat little business in Florida that's expanding into South Carolina and Texas, but really well run, trading at book value type of thing. We're finding opportunities like that. We still, in some of the precious metals, the commodities, as I mentioned, commodities like copper, if we can get businesses invested in that space. Technology is still a very, technology is driving things, so we're always looking at technology, and are there spin-off companies that will benefit from the AI spend and data centers. So some of the guys who are doing the building, some of the real estate companies like Prologis has some exposure there, and again, nice little dividend and trades at reasonable valuation and continues to grow. Just looking sort of across the spectrum and trying to find a unique combination of businesses that we like.